We'll start with the economic data from last week. And as I'm doing this, I should say I am flying on Sunday from Costa Rica to Canada. So I'm doing this late on a Saturday night. It's not as complete as I would like it to be, but we'll get through what we have here. Monday, used car prices month over month for September, negative 0.5. Contrast that to what we saw in CPI for used car and trucks, 0.31. Year over year, negative 5.3. CPI had negative 7.5. Moving into Tuesday, got balance of trade for Canada, negative, more negative than the month before. And for the US, it's negative, but not as negative. Negative 70 billion. Last month was negative 78 billion, pretty much near consensus. Exports is mostly services, and imports are mostly goods. Fairly cheap goods. If we're talking about overseas, a lot of this trade here, a lot of it is cross-border, where for the auto industry, a lot of parts are made in Canada and imported into the U.S. India interest rate decision, no change. Contrast that to South Korea, which we'll see later in the week, had a cut. Wednesday, Mexico inflation rate month over month, 0.05, almost non-existent. The month before was 0.01. We could say, oh, it's 500% higher, which would be true, but, perspective. Year over year, 4.58, down from 4.99. Core, 0.28. The month before, 0.22. So, yeah, slight increase. Year over year, 391 versus 4, even below consensus of 395. Moving into Thursday, got inflation, and this really hurt duration. It wasn't really that bad. We had the inflation peak, and then it came down, and then it did this kind of thing for a bit before it took another leg down. Now it's doing this thing right now before it will take another leg down. It never really just goes in one direction. Overall, this isn't bad. The core, 0.312. The month before was 0.28. Yeah, it didn't get to consensus. Looks like it was unchanged, a little bit higher. Year over year, 3.26 versus 3.2. It rounds up 3.3, right? Inflation headline 0.18 versus what they wrote down as 0.2. 0.18. The month before 0.19, and then year over year 2.4. Overall, not that bad. If we look at some of the aggregate indexes, all items less food, 2.5. All items less shelter, 1.1. All items less shelter, think about that. All items less food and shelter, 0.8. Just let that sit in for a minute. All items less food and shelter, 0.8. This is year over year, by the way. Year over year, 0.8. All items less food, shelter, and energy, 2.1. I'd say you're there, right? Look at these ones in deflation. Commodities, negative 1.3. Commodities less food, energy, used cars and trucks, negative 0.5. Commodities less food, negative 3.2. Less food and beverages, negative 3.4. Look at durables, negative 2.9. You're already seeing deflation in that broad sector. This is the problem. Services, 4.7. Services less rent of shelter, 4.4. And services less medical care services, 4.8. This is your big issue over here. That's what's keeping it up, is the services component. Thursday, South Korea interest rate decision, cut of 25 basis points. Friday, out of Canada, hard to argue with this. Unemployment rate 6.6 down to 6.5. Employment change 46.7. Have a look at the mix. Full-time up 112, part-time down 65. That's what you want to see. Average hourly wages 4.5 down from 4.9. That's a good thing for inflation. Participation rate 6.51 down to 6.49. The participation rate decreased, and the unemployment rate decreased only because a lot of employment was created. It's hard to find fault with this report, and the Canadian looked like it wanted to gain strength on it, the Canadian dollar, but gave it up during the rest of the day. sitting in a range I think is right for the Canadian right now, anywhere between 136 to 138. Put the 2 zeros on here, I think is the right range for the Canadian. Anything past 138, I'd be probably willing to buy the Canadian dollar against the US. PPI, this is not bad either. Headline, September is 0. 0 on PPI. Last month was 0.2. Expectation was 0.1. Core PPI 0.2. The previous month was 0.3. Came in as expected. And year over year 2.8. Yeah, that's a bit of a problem. It was 2.6. It was expected to increase because of base effects up to 2.8. Some things that we saw a few weeks ago, we'll talk about now. China finance ministers meeting the finance ministers conference was Saturday. When I wrote this up, we were still waiting for the outcome of this. There was an outcome. They're willing to use deficit spending to help some of the local governments with their debt load, but nothing specific was given, no specific numbers, just sort of a general, yeah, you know what, we're going to help out on some things, but nothing really specific. So I don't know if that is enough to save the Chinese stock market. It ran up and then it started to come back down. I don't know. Israel, we're still waiting for their Iran response. Didn't get anything. I thought for sure we'd get something, but nothing. I think they're waiting for the election because they have to work with the next administration. So they're not going to do something that will alienate the next administration if it's not the administration they want. So let's start with a Harris win. I think you'll have limited retaliation. I can also say at this point you'll have lower oil prices because they don't support hitting the oil terminals or the refineries. They don't support that. So you'll get lower oil prices. I think you'll get a stronger peso because they're not talking about raising tariffs on goods coming out of Mexico. You get a Trump win, you will have higher oil prices because Trump says it would be crazy not to hit their nuclear facilities. So if they don't hit nuclear, he's going to be all in on hitting their oil terminal. He's going to be all in on that. So you'll have higher oil, a weaker peso, but a big retaliation. I think, based on what I've been reading about Netanyahu and the way he's been, maneuvering through this and pretty much rejecting any calls for restraint or peace talks until the problem is completely solved. This is a problem he wants solved. If Trump wins, there'll be a big retaliation. If Harris wins, there'll be a more measured retaliation. So right now, I think there's a sports betting book on this, and it has the odds on favor for Donald Trump. Okay, let's look at rates and yields. Money market rates all coming down this week. Capital market rates continuing to climb. Look at our 10-year, 4.08%. The 30-year, 4.39. Now, from the 5-year out to the 30-year, yields are higher than they were at the beginning of the year, even after our 50 basis point cut. The market on the long end really goes to extremes. It either prices in way too many cuts or it prices in no cuts. It's almost like it's throwing a tantrum right now saying, well, if we're not going to get a whole bunch of 50 basis point cuts, I'm pricing in no cuts. How do you like that? It's like, take a little pill here and settle down. I think this is way overdone on the yields to the upside. Curve is still upward sloping. The capital market curve, the money market, the capital market, coming uninverted, negative 65, up another 10 from negative 75. Canada, negative 62, and the capital market curve is upward sloping. Balance sheet runoff, the SOMA, nothing ran off this week. No maturities of anything in the SOMA. Balance sheet down 85 million. That's a rounding error. Nothing going on there. Curvature, negative 18. Down from negative 23, and money market funds still going up another 11.26 billion. I think it is well in line with the story I laid out last week about the sheer number of people aged over 65 who are probably taking advantage of very high money market rates and moving their spending for the next year into the money market now. Retail up 8 billion, institution up a little over 3 billion. Okay, next FOMC, 25 days away. Any probability heavy towards a 25 basis point cut, almost 100%. Going out to December, ending at 4.5, which would be 25 basis point cuts, 84% probability. U.S. election in 24 days. China vehicle sales in 1 day. I think that's important to look at. Canada's CPI in 2 days. The ECB rate decision in 4 days. U.S. retail sales in 4 days. Japan CPI in 4 days. I put it down. I think it's worth looking at, but I don't think it's going to do anything to any potential rate move. You got a rate decision at the end of the month. I don't see anything happening, regardless of what the CPI comes in at. This is going to be a big one here. You got to hit 5%. That is the target that they want to hit. There is China third quarter GDP. Look for the 5% number. You come in at 5% or above, I think you can get a sell-off in commodities because there'd probably be limited stimulus to go. You come in under 4%, commodities could get a big boost because that would probably signal if they're not going to hit their 5% target. Look for more stimulus. You also get retail sales and unemployment, big data dump in 4 days. And you got some Fed speakers, Monday, Kashkari and Waller, Tuesday, Daly, Kugler, Bostic, Thursday is Goolsbee, and Friday is Bostic, Kashkari, and Waller. The overnight repo, the reverse repo, 331, hanging pretty tight at the $300 billion level, 331. Reserves hanging very close to the 3.1 to 3.3 trillion level. Not a lot of movement in these lately. At current runoff of 40 billion a month, we're looking at 25, just a little over 2 years before we get to we'll call it the middle of ample reserves. Going out to December 2025, still sitting at 3.5 as the upper limit. That is 625 basis points cut lower from where we are now. I should say something about that. I seem to think it would be lower. I think I think we're going to get 2 more this year. And I think inflation continues to come down. That to stop after 2 more this year and only have 4 next year out of 8 meetings, that's a stop and go, a cut, a pause, a cut, a pause. I'm not seeing that. I think it goes further than 3.5. In fact, I'd say you're somewhere between, I'm going to circle this, I think you end up one of those two. Okay, real rates, kind of mixed across the board here. Break-even rates all higher. I guess that's on the back of CPI not coming straight down, but deciding to take a little sideways tour before it comes down. I mean, this is normal. Fed funds futures, Q4 pricing in 47 basis points. There's 2 cuts by the end of the year. I think that's right. I think that's what you're going to get. I don't think you're going to get a 0, and I don't think you're going to get a 50. I think you got 225s. Q1, 39. Markets stuck between 1 or 2 cuts there. Q2, 30 basis points, sort of leaning more towards 1 cut there. 126, that's 5 cuts in 6 meetings. Yeah, I don't think there's much opportunity to trade that one. I look at that, just eyeballing it, you think, yeah, that seems about right. I don't know which meeting will be the pause, but, seems all right. TLT down another 1.94%. SPX up 1.11%, sitting at 93.53. I did not think we would get there. This is way overdone. How far back do you have to go to find 93.53 on TLT? You got to go back to July 30th. That was the July meeting when no rate cut. The upper end was 5.5, and Powell said, I think we're ready to start cutting rates, and the belief was it would be 25 basis points. TLT was at that price at that time. We got 50, and TLT is at the same level as then when you got no cut. and the upper range was 5.5. So it's sentiment that just wags the long end of the curve, and sentiment has gone way too far the other way. Look at this on implied volatility. Can you ask for anything more? If you're going to be selling puts at 92, 91, 90, oh, by the way, I've done a lot of these on this one. I went overboard on this one because it's way overdone, so I went way overboard as well. Look at the premiums that you're getting when you sell these things. Well, I shouldn't say look at the premium. You're at the 100th percentile. Implied volatility has never been higher in the last 13 weeks or the last 26 weeks. And the higher IV goes, the higher the premiums go. So, you know, through the transitive property of look how high implied volatility is, I can say look how high those premiums are. Okay, mortgage rates, 6.32. From a couple of weeks ago, threatening a 5 handle to pull back to 6.32. 10-year Treasury up 24 over 1 week. That's a full interest rate hike there. The 30-year FRM up 20, the spread down 4, down to 223. Look at mortgage apps, negative 5.1 for the week ending October 4th. I don't see that next week you're going to get anything positive on mortgage apps if this is how you ended Thursday. Housing, didn't like any of it. Higher mortgage rates, long end of the curve going up. All housing has pulled back on that one. Same with the ETFs here. IYR, it makes sense. IYR is REITs, which are going to be interest rate sensitive. Same with your mortgage REITs, interest rate sensitive. There's an outlier for you, ABR. And XLU pulled back, 2.53. Didn't pull back last week. I guess AI hype kept it alive. And this week it's like, well, you know, have we gone too far? Interest rates are higher after all. It is a duration play. That it's pulling back because the long end of the curve is increasing is not surprising at all. So higher rates have really caused that to pull back. I'm still interested in utilities. There's a long-term play on this one. This is not a short-term trade. If you think there's going to be more we're moving into a more digital world, you got to move that stuff around. If you are moving electrons, they need copper. If you think it's going to be a more AI-driven world and a more autonomous world, a more robotic world, you need to move electrons around. You need copper. You need something that generates the electrons. You need utilities. Plain and simple, you need utilities. So the rate base, we already know for the next decade, the rate base is set to increase 5, 6, 7%. And utilities make their money by the increase in their assets, period. It's a guaranteed return because they are quasi-monopolies. So I am still bullish utilities. The more it pulls back, the better it is. It just makes it more attractive. What do we have this week coming up? The housing market index for October. The previous reading was 41. That's in contraction. Are we going to have another contraction on top of that? Or are we going to start moving towards 50? Still in contraction, but does it get better? Friday, building permits, housing starts. Looking at CPI, I broke this out as well. Rent of primary residence, 0.277. That's not unrealistic. Owner's equivalent rent, 0.332. So if we're thinking about, well, how do we get this down? You get this down by getting interest rates down. As interest rates come down, housing price, more inventory comes on the market, housing prices start to subside a little bit, and that's where you start to get pullbacks in OAR and rental rates. Until then, keeping them higher and not cutting rates isn't going to fix that. I'm sure the Fed is aware of that. You don't have to get all of your disinflation from exactly the same place that you got your inflation. So if you can get some components of core down faster while others are a little stickier, as long as the basket of goods is coming down, that's good. You don't have to have, you don't have to get, as I said, disinflation the same way you got inflation. That's why we look at a basket of goods and not just one item and say, oh, the price of this is too high, we can't do anything. So I do still think the Fed has got good permission for 2 more cuts this year. I, as you recall, did not think that they would go 50. I saw no reason to go 50. They went 50. Now it's looking like, well, maybe they made a mistake. Whereas if they had gone 25, it would have been, well, you know what? It was a measured move. It was a measured move. Okay, inflation didn't come down the way we want, but they took a measured move. No, they went big. That's a problem. I think that was a policy mistake. Oh, well, we'll see what happens in November. We got 25 days. I'm expecting 25 basis points. That is how you get this down. And if you get this down and other components aren't coming down, the core still comes down. That's the important thing. I almost forgot because it's so bloody boring. OAS, nothing to see here. In fact, so much nothing to see here. Look at this. You still have a contraction of credit spreads, which is consistent with an equity market that keeps hitting all-time highs. It keeps hitting all-time highs. Then there's no problem in the economy. There should be no credit problem in the economy if we use that as a correlate. So that spreads contracting while markets keep hitting all-time highs, at least that's consistent. Okay, we have to talk about Tesla. It was an event, a rather underwhelming event overall, which the next day, as we see over here, showed. And look at the volume. We look at the all the way back to September. This is a 1-month chart. Look back 1 month. It's the highest volume over the last month. You still have earnings coming up October 23rd. I do expect the hype machine to be in full force for that. The Teslites will convince themselves that earnings aren't going to be bad, that earnings are going to be pretty good, that earnings are going to be really good, that earnings are going to be a record, that earnings are going to blow it out of the water, and Tesla's going to show the world that growth has returned and that its margins are in. You know what's going to happen going into the 23rd is the story will get bigger and bigger and bigger, and the price will go up only to disappoint. So I will short on any hype rally. You got most of those sales. It's 6% growth. You know, if you look at the third quarter, quarter over quarter, year over year is not really that exciting. Looking at September 23rd on the earnings, I would look for margins under pressure because to get those sales, you're offering a lot of incentives. Also, going forward, we're well aware that, you know, the outcome of the Robotaxi event. I would look for headlines that lean into this, that start leaning into Optimus, leaning into Tesla, maybe moving up timelines, maybe changing some things. But the hype machine, I think, will be very much alive. And really leaning into FSD. It's just around the corner. By the end of the first quarter, surprised if it doesn't happen. There'll be some story coming about regulators really, seem to be friendly about this. Maybe they'll make some announcement that they'll self-insure all of the robo-taxis that individuals buy, because there is no insurance regime, but I would look for that. That's what makes this stock such a difficult thing to short, is there is a large cohort of shareholders that are willing, absolutely willing to believe gospel, word for word, that all of this is 100% going to happen and it's going to happen tomorrow, right? So I also wouldn't be surprised to hear something about pre-orders for the Cybercab opening up soon, and the back order book being, or the order book being 1 million units, before the end of the year. It wouldn't surprise me to hear any of that. But before you think this is dead, the hype machine is still very much alive here. During the event, believe it or not, the price in overnight trading got to just around a little over 260. It was up $13 at one point. I tried shorting it in overnight trading, and I couldn't get it. And I've done overnight trading before, and I've always been able to execute. I couldn't get it. I'm not sure if overnight trading is only for long-only positions. I'm not sure, but I couldn't get a short on it. No matter where I set the price, even a market price, I couldn't get it. Disappointing, unfortunately. So based on what we saw Friday, for now, this is a car company. with car company growth and car company margins. It's not a robotics company. Some of the stories that came out the next day for some of the AI experts and robotics experts that were actually in attendance were calling out the robots as saying, no, they were not operating under their own control, and that the cyber cabs were not operating using AI, that it was a predetermined course and it was all just programmed in, that it was just a lot of smoke and mirrors. So for now, it is just a car company. When 95% of your revenues come from cars, you are a car company. I think as a car company, it's worth 40 to 50 billion. I'll give it the same valuation as GM, even though GM is way bigger in terms of the number of cars it sells, even though GM has a Robotaxi. GM also announced a Powerwall on Friday to rival Tesla's Powerwall, cheaper per kilowatt hour as well. GM is more profitable per car and has triple the cash flow, the free cash flow that Tesla has. Currently, Tesla has a market cap of 682 billion. I give it 40 to 50 billion on the car company, which gives it a price of $12.77 to $15.97 for the cars, if you just value it as a car company. I'm going to throw in another 50 billion for full self-driving, even though with cameras and neural net, it's simply not going to happen. Full self-driving is going to happen on a particular type of technology. It's not going to be cameras. It's going to be communication. It's when every car talks to every other car and the infrastructure talks as well. You don't need big data sets. So I've said this before, all the data it's collecting has a future value of zero. Because you won't need to figure things out. Every other car will be able to tell you what's going on. You'll need much smaller compute and much smaller data sets when everything can communicate with everything else. If you're going it alone, if you're saying only our cars will do this and we got to figure it all out, then yeah, you need this. But the future value of that data set is zero. But I'm going to give 50 billion for full self-driving, for Robotaxi, even though I don't see it happening. Waymo is way ahead on that one. For Optimus, we'll put some money in on Optimus, but at 20 to 30,000, or what he said, $28,000, there are 8 billion people on the planet and everyone will have one or two. There are 7 billion people on the planet who cannot afford that. Out of the 8 billion, 7 billion can't. Out of the billion, I'd be surprised if there was a 1 or a 2% uptake on that. It's not 8 billion people that will have this. And energy storage, let's throw 50 billion on for all of that. That gives them a price target of $32. I think that's right. I think they're a $32 stock masquerading as a $220 stock, but they are an incredible hype machine. I thought Beyond Meat was the best hype machine I've ever seen, but this is an incredible hype machine. I still remain long the December 220 puts. They are now in the money. Cha-ching. Considering the day before I was hugely negative, now I'm significantly positive. Okay, SPY, another all-time high, 578.61, ending the week at an all-time high. 50-day moving average is 3.75% below, and the 200-day moving average is 9% below. Earnings coming down ever so slightly, but still coming down, 266.66 to 266.09 from LSEG, 265.11 to 264.18 from SP Global, which pushes the multiple higher. It's a more expensive market now that you have lower earnings expectations. Why wouldn't you pay more? Versus 21.63. You have volatility showing up, which seems rather odd. At the level of the index, volatility usually rises when the stock or when the index drops. The correlation is tight on that, about 0.8. Very rarely do you get a smile on the index, and there is no smile. Right now, it is really just implied volatility increasing as the market is grinding higher. That's an oddity. I mean, it's not unheard of, but you look at it and you go, well, it's inconsistent. But I mean, we've had nothing but a whole bunch of inconsistencies for 2 years anyway, so Why not? But it's just inconsistent. Looks like there is a lot of protection buying going on while the index is going up. Maybe it's just, you know, you're at the beginning of earnings season and there is some concern, so let's get some protection. At 83 percentile, the protection is not that cheap anymore. For earnings this week, the clown show is back in full force. LSEG says 41, SP Global, I don't even think they're trying anymore. I think they've really just given up. I think they look at earnings and they say, this is a tough nut to crack. I mean, they all publicly announce when they're going to report earnings. How the hell are we going to keep up with something that they publicly report? Right? I mean, it's just too much. It's a step too far. How do we possibly keep up with this when they issue a press release weeks and weeks before they actually report earnings? Anyway, Sector Spider has 43 of them. Hey, so we're just going to use this one here next, and we're going to look at some notables that may be reporting. It's big banks are going to continue at the beginning of the week. You'll end the week with regionals. Netflix is in there, and then there's a few transportation and industrials in there, but tech doesn't really get in the full force until the week after. This is still financials. So let's have a look at that, and I don't know. There must be somebody out there that can solve this problem. Either somebody solves it or I'm going to do it. Okay, let's go to Tuesday, and let's order them by sector. So you can see XLF, just a whole bunch of financials here. Bank of America, Goldman Sachs, State Street, Citigroup. And then you have some transports, JB Hunt, United Airlines, from the Staples, Walgreens, Boots. And then from XLV, United Health, Johnson & Johnson. The next day, again, look at the number of financials that you have in here. You start to get into some of the regionals here. Anything interesting? From real estate, Prologis. This is in the U.S. the largest industrial REIT. Prologis. That'll be interesting. Not too much that I care about in the rest of it. Let's go to the 11th. Netflix. Consensus EPS $5.10. You got more financials, so it is a big week for financials. And then on Friday, 3 more financials. You have Schlumberger and Procter & Gamble. Not until you go into the next week, of which you can do. You could just click here. And I'm sure this is wrong. This will probably be wrong, but you can see who is reporting the following big week for tech, the week after. And that's it. This was a short one because, like I said, I'm flying out Sunday. Got to pack and get a whole bunch of things done. I'm doing this late on Saturday evening. There is no live event Sunday night. I know this is a short one this week. Put up the calendar, talked about yields, looked at SPX, and I took a small victory lap on Tesla. And that's it.